Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, October 3rd, and we've got a few economic news releases today, but the big one will be the headline news, and we'll jump right into it. For economic news releases, we'll start off with the ISM. We had a 50.6 before, and it looked like they were kind of estimated to be the same, but it actually jumped up a little bit. So for about 30 minutes, actually, things were looking pretty good there, at least from the investors' standpoint, Wall Street, because they weren't expecting manufacturing to kind of jump up a little bit. So that was actually kind of relatively good news. And we'll show you on the headline news, which is what really kind of what's driving the market today. So uh, construction spending was spent negative, and it was supposed to improve a little bit, but it did actually improve quite a bit here, up to 1.4 from negative 1.4 all the way up to 1.4, so 2.8% difference, which is kind of nice to see. So now we'll kind of jump right into the headline news. Uh, and basically, stock market's down today, and a lot of it has to do with Greece. The big news is that Greece looks like they're going to miss their deficit targets. Basically, what that means is that when they did the first bailout, they had to hit certain numbers in order to get the second bailout or second group of money to be able, so they don't basically default. And it looks like they are not going to be able to meet those numbers. So question now is, are they going to revise them? Are they going to do something different so that way they can continue to receive the money and avoid the default, or is the default inevitable? A lot of concerns here. The big concerns, the reason being this is important is because uh, people are wondering, okay, if they default, then is Greece going to possibly pull out of the European community? If they pull out of the European community, then obviously they'll have a new currency. What would that currency be? Are they going to come up with some currency to inflate the value of their currency to try offset the debt that they have to inflate it? And then when you have that, you have other countries that are kind of on the brink of the same situation with like Italy, Spain. They could possibly do the same thing, and then you may even throw France into the mix. France has reserves about what's going on right now too, but this is a reason why it's a big issue here. This is kind of similar to what we experienced back around 08, 09 with the TARP money for the big banks here in the U.S., but where some of these banks are too big to fail. These are questions about, are these countries too big to fail? So on a larger scope, so they got actually a little bit more serious issue than maybe the average person may realize here. And so this affects a lot of people because these are investors that are buying their debt, and if they can't get a return to their money or at least get their money back, then they can be reluctant, and this could create another global credit freeze that we experience on a larger scale than what we saw before. So let's go ahead and jump to see how this is affecting the interest rates on the bond market. As we saw before, we're starting this upward trend, and today did not disappoint. We actually jumped up, kind of had a slight opening gap. So I expect that to close at some point. But right now we're having a nice upward trend continuing. So interest rates again are improving from what we had Friday. So we've had a nice week or so of improvement on the interest rate. So this is fantastic news here of what we're seeing here. So. All right, folks. Again, if you stop by Mike's Daily Market Report, please subscribe if you want to receive these on a daily basis and keep up to date. Certainly be able appreciate your subscriptions. You guys have a wonderful day.